Hey traders, Jason here from Leavitt Brothers. It's about time I did an update of my State of the Market series. Market's kind of been all over the map lately, up, down. There have been some bits of evidence that buyers are coming back in and internals improved, but then it would just turn right back around the next week and give everything back. So overall, the market hasn't really done much. It's been kind of frustrating. There's been some good trades, but this is the kind of market where you're in, you're out within a few days or a week. You can't really sit back and relax and let trades play out. This is definitely a market where you want to be a little bit more aggressive, erring on the side of taking profits too soon rather than too late, because if you're too late, you often give them back. All right, so I'm going to go over the market right now. In my eyes, there are three major ways to analyze the market. One is to look at the index charts. Two is to look at breadth, advanced decline line, advanced decline volume line, stocks above key moving averages, new highs, new lows on different time frames. And then the third way is just to look at individual stocks. Okay, I'm going to look at a lot of leading stocks. If leading stocks are doing well, the market's going to do well. If leading stocks are not doing well, then the market's not going to do well. So those are the three main ways you can analyze the market. I'm going to look at number one and number three. I'm not going to look at breadth today, so I'm going to quickly look at the index charts, monthly charts, weekly charts, and then I'm going to go into some key individual companies. And basically, the purpose is, to see how they're doing. If they're doing well, then the market will do well. If they're not doing well, then the market's not going to do well. All right, so let's get into it here. All right, so here is the Nasdaq monthly chart going back several years. Okay, so what you can see here is we've been in a pretty good, solid uptrend. We got support from the 8 EMA, support from the 8, support from the 8. We still have some, a little bit of a gap here. So overall, trend is really, really good. It's really, really strong. The chart moves from the bottom left to the top right. Lots of volume in here going into the up months. Everything looks good on a big picture. Okay, but the chart isn't without some disruptions. Like we got a couple months here, we got a big down month here, we got a big down month here. This is when the virus broke out, and then we got down month there, and then in here from high to low we have some more weakness. Okay, when this stuff happens, you should celebrate it, because that's where opportunity comes from. Okay, I think it was Peter Lynch who said something to the effect that if not for the corrections and pullbacks, then history's best money managers would not have done nearly as well as they did. Okay, when you get pullbacks like these, a weakness that lasts a month, 2 months, 3 months, those are gifts. Okay, pullbacks within uptrends are gifts. They allow us to buy stocks on sale. Okay, that's what they do. Okay, because what happens is, if I can delete these, what happens is during this kind of a period, a really good growth leading stock will rally from 25 up to 50. But then during this period here, that same stock will drop from 50 back down to 35. And then during this period here, it'll rally back up to the highs and beyond the highs. So I would rather buy the dip within the uptrend than chase it higher. Okay, so don't resist. And most of this is a mental resistance. Don't resist a pullback. If the market wants to get weak for a month or two, let it get weak. Let it pull back. Let some leading stocks drop, and then you could buy them on sale. Okay, and then you can ride up a big percentage move back to the high and then beyond the high. All right, so overall, Nasdaq looks really good. We have run away from the 8 here, and even if it wanted to come all the way down here to the 21, that's fine with me. Give me a multi-month pullback. And then we'll get an opportunity to buy some quality stocks at a discount price. All right, let's look at the S&P. Here's the S&P monthly with Bollinger Bands. Okay, you can see the index generally touches the bands, within a channel, within a trend. So you can see here where it's like at the top, comes down and tests the lower band, kind of top band, lower band. Then over here at top band, middle, and then it presses higher. Okay, it doesn't quite come down to the middle band there. Pushes higher again, tests the lower, upper, middle, and then we get a little couple tests here in the middle, presses higher. Then here's where the virus came out, lower band. Okay, super strong here, so it didn't even pull back to the middle band here, and it's been pressing higher month after month after month. Okay, am I predicting we come down and visit the middle band? No, I'm not going to predict that at all. Like that's just stupid to predict that we're going to do such a thing. The trend is up, it's strong, the index is really doing very, very well overall. But just know that, you know, this period here that has lasted 18, 19 months has not had a single test on the middle band. And you can look back, and we don't typically last that long without having a pullback within this range here. Okay, so again, big picture looks really good, but we are extended, and don't fight a pullback. Okay, if the market pulls back for a couple months, that'd be great. You know, we'll get an opportunity to buy some good names at a discount price. All right, let's look at some weeklies here. So here's the Nasdaq weekly. Okay, strong move up, consolidate here, support from the 21, strong move up, consolidate here. We got support from the 21, then we get another move up, and now we have support from the 21 here. Okay, strong index, trending up. One thing I want to note is that these consolidation patterns should be viewed as gifts. Okay, I did a study, which I talked about a lot in my masterclass, studying different types of markets, and to note which type of market actually produces the most number of big winners. And what I found out, and again, what I talked about in the masterclass, I'll just briefly mention here, is that if you have a market that just kind of goes like this, up, 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 and at the end of the year it's up like 20%, versus a market that kind of goes like this and does this, and then legs up and does something like this, and then legs up, and at the end of the year it's also up 20%. This market here produces significantly more big winners than this market here. Okay, this market up here is actually kind of hard to trade because you don't get any dips to buy. Okay, and there are some winners, but there are not that many winners. But if you get a market that does this, those dips within the year actually set the stage for a lot of big winners. So this type of a market actually produces the most number of big winners versus any other market. So what we've seen here over the last year and a half is absolutely perfect. Okay, for the market to move up, I need to delete these, for the market to move up and then have some up and down movement, and for the market to move up and down movement, that's setting the stage for a lot of outperformance. Okay, so if the Nasdaq wants to drop here and do something like this, and again, I'm not predicting it, I'm just saying, like, don't resist it if it happens. If the market wants to do that, let it do that. Like, that's where opportunity comes. Here's S&P, similar story. I'm going to get through this here. Move up, consolidation, support from the 21. Got support from the 21 here as it consolidated again. And then it just ran up the last few months, and we got, now we're back down near the 21. So I don't know what's going to happen here. I just do know that overall the market's in good shape, and if it wants to, move sideways here, that's fine. If it wants to take out the 21 and try and base at a lower level, that's fine. Let the 50 come up and try to support it. But overall, the market is in pretty good shape. And so, a bad week here or there, even a bad month, should not be, overly alarming or a big concern. One more here. Whoops. Here's Russell 2000 weekly via IWM, because Stock Charts doesn't have the Russell chart. As you can see, it's just trading in a big range. Okay. The longer the range lasts, the less bullish it is. I think when you move up and consolidate, that's bullish, but because you think like, hey, momentum's still up and it's just resting. But the fact that it's lasted so long tells me there is no upside momentum, and I consider it just a neutral pattern. Stock, rallies get sold, dips get bought. It's not going anywhere. There's absolutely no directional momentum whatsoever. So that's what's going on. So the Nasdaq's doing well overall. S&P's doing well overall. Small caps are just simply neutral. No momentum whatsoever. All right, so now let's look at some individual names to see how they're doing. If individual leadership stocks are doing well, the market's going to do well. If they've broken down and are struggling, then the market's going to do the same. So let's go through some. All right, so here's Apple. So you can see the stock rolled up and down here, then it broke out, consolidated here above the 21, tried to break out, consolidated here above the 21, tried to break out, and since then it's given everything back. Okay, so we have a support level here. Right now the stock is trading below its 8 and 21, and both of those moving averages are declining. So I would consider, short term, we are definitely under pressure here. Okay, this can move sideways here and allow the moving averages to kind of come down and eventually come into play. But as of right now, short term, with the 8 and 21 trending down, the stock trading below the 21, we got a support level here. I consider the near term, I consider the trend to be down. And there's at least a possibility that the stock takes out support here and perhaps tests previous important levels from before. Okay, so Apple not in great shape short term. Here is Microsoft. Okay, support from the 21 here, support from the 21, then it consolidated here in a range, was looked like a consolidation pattern within an uptrend. But then we got this gap down, which is certainly a concern in the short term, but not overall. Okay, we got a gap down over here from a high, and then the stock just simply spent 5-6 weeks trading in a range before it moved up. Okay, we got a gap down here, and the stock followed with trading in a range for several weeks before it eventually moved up. Okay, it happens. Okay, so what we got here is the stock's going to have to do some backing, filling, and such. So short term, we're under pressure. Okay, no doubt about it. The stock broke down from a high, 8 crossed below the 21. Stock's trading below both moving averages, which are now trending down. Google's holding up a little bit better, but still turning down in the near term. We got support from the 21 all through here, support from the 21. Then the stock gapped down, moved up, got rejected by the 21, and is now trading at 5-6 week low, below both its 8 and 21, which are now trending down. So near term, stock's under pressure. Here's NVIDIA. Okay, moved up here, traded in a pattern, broke out, huge volume here, but it has given back all those gains and is now sitting at a support level. Okay, so overall it's doing fine, but near term it's definitely under pressure. So if we gauge the market based on the movement of leadership stocks so far, we're 3 for 3, 4 for 4, however many I've covered, all of them are leaning down. Shopify, it topped before the market. Okay, market was making new highs not that long ago, and Shopify was putting in a very obvious lower high. We have a support level here near about 1400, which it broke yesterday, and today it's following through. So top is in place. Stock breaks down in big volume. Probably going to come and fill some of this this thin area over here. Okay, so again, another leadership stock that is under pressure. Palantir, kind of a frustrating stock. It's been trading in a range for a while. Had resistance here, as you can see. Some good volume here in the base, which was suggestive of bigger players accumulating. So right over here, we got volume breakout. Then the stock was trading between a resistance level and its 21 EMA. So the thought was, hey, if it could break out on strong volume and then consolidate here, then perhaps it could break out and get up into the 30s, and instead it's just broken down the last 2 days. Okay, it's gotten hit pretty hard, so it looks like this stock's just gonna come back down here and just trade more in this range. Okay, tried to break out, but it failed. Okay, maybe the timing was wrong. Maybe if it would have broken out 2 weeks ago, it would have worked well, but because it broke out more recently, but maybe it's bad timing, and again, it's a leadership stock that's heavily traded, heavily owned, heavily very closely followed, not doing well. So it's another check against the market. Adobe has done really well, large cap stock, doesn't get the press that the other large cap stocks get, has done really well, but it has already dropped from the high 600s down to the high 500s, so it's down about 100 points off its high. ASML, one of the biggest semiconductor stocks out there. As you can see, trend up, lots of gaps and stuff, but the overall trend obviously is up. And then in the last 2 weeks, the stock's dropped from 900 down to the mid 700s, and including a big gap yesterday. So not doing well. It's definitely under pressure. DocuSign, it's kind of a sloppy mess. That's the personality of stock. It broke down there, broke a support level there, so obviously very toppy. Next up, even Facebook, you got support from 50, 50, 50, but then it broke support there, and now it's trading at its lowest level since mid-July. 8 and 21 are trending down, so near term stocks under pressure. Cloudflare, steady performer. Obviously broke a support level. Volume got really strong, trading below key moving averages now, so this stock's under pressure. PayPal, so we got a double top, boom, boom, and we got a support level here, which it broke yesterday. So this stock looks like it's just going to continue trading in a large range. It's not ready to move up. It's under pressure. Snap, not a bad one. Just last week it broke out. Volume was pretty good over here, but it has given everything back. So that's a sign of the times that you had a great company, breaks out, volume there, everything looks good, and then 3 days later the stock gives everything back. So that's the kind of market we're dealing with right now. The trade desk, weak stock, underperforming the market. The market's making a new high. The stock was not even close, so this stock's been trending down, and it looks kind of toppy. It looks like we're probably headed, possibly headed south. It's definitely underperformed, so if the market continues to be weak here, it's probably going to go lower. So another stock indicative of a weaker market. Twilio, similar thing, market making new highs, the stock was making new lows, and we got a support level was broken right there. Okay, so the indexes overall look pretty good, but they're certainly up enough and far enough away from key moving averages that there could definitely be some backing and filling here, but overall they're in decent shape. But when I look at key leadership individual stocks, they're all under pressure. Okay, not all, because like Tesla's actually doing pretty well, and there are a few others that I could cherry pick and show you that are doing pretty well. But like Apple, Google, Facebook, Shopify, and a bunch of others that are like key stocks, growing companies, backbone of the economy type stocks, stocks that it would be impossible for them to move opposite the market. That it'd be impossible for the economy doing really well and for Facebook to be. Facebook's just not going to struggle like that. Neither is Apple. So if I judge the market in the near term based on the performance and performance of individual stocks, the market is definitely under pressure. So you got to be careful. But as I said, near the top, celebrate near-term weakness, because the near-term weakness offers buying opportunities at a later date at much greater levels. Okay, stand back, let stocks fall. If a stock rallied from 25 to 50 and drops to 35, that's great, because you got to buy it at a lower price, and there's just a heck of a lot more upside available when the market does bottom. All right, so that's it for now. Hope you got something out of this. Check out my masterclass where I teach a lot of stuff. Just go to Leavitt Brothers homepage. There's a link up here. It'll just take you to a page which describes the class. There's a video there that describes what I teach in the class. You ought to check it out, especially at a time like this where the market's kind of challenging. Maybe you lay low, don't trade very much, and maybe that's the time to kind of circle the wagons and take a class and learn, so that when the market does bottom, you're ready to go. You can make a lot of money. All right, have a good night, and I will see you next time.